at this 10 minutes from here. IT index is starting about 1.5 higher. So actually IT and consumer, the Nifty consumer index and the Nifty IT index were the two sectors which were doing well yesterday. And of course, I mean, IT sold off on Saturday for some reason. That's coming back up. The Sensex is up 0.5% as well. The consumption index is starting 0.25%, 0.5% higher. And we should have the Nifty heat map maybe come up on your screens as well in just a bit, just to give you a sense of how we are starting. But broadly, as expected, and as the GIFT Nifty indicated earlier on, this is a good start.
Well, Trump has postponed those tariffs on Mexico as well as Canada, and we had mentioned this earlier today. Samvardhana Motherson could be the one that pulls back all that it lost off yesterday, and that's precisely what's happened. So that's up close on 7%. Giving it company on the upside is Sona BLW as well, so that's another stock that's done well. Castrol reported its numbers, declared a dividend of around 9.50 rupees as well. The street likes that. Remember, it's corrected a fair bit from the recent peak, but for starters, it's up close to around 7.5%. You have NLC India as well. The numbers look pretty okay, so that stock was up close to around 5%. Another one that's opened up with solid gains is Premier Energies, and the volumes are very, very high on that one. Remember, Premier Varie, they had seen a fair correction from the recent peak, and now post the numbers, you've seen both those two stocks that have done well. Kamath Hotels, a smaller stock, we don't talk about it very often, but that one's up close to around 15% as we speak. So big volumes actually for an initial trade on that particular name. Thomas Cook is the one that's pulled back close to around 8% to kickstart trade. Welspun Enterprises as well as down close to around 8%. Volumes not very, very high on that one though. And another one, Vishnu Prakash, our Ungli, that's down close to around 13%. Only highlighting it because, have very, very large volumes out there. And that one is down. Paradeep's Phosphates as well, down close to around 5.5%.
Yeah, absolutely. I mean, Samvardhana, the gains now 7.5%. But actually, it's not the only one. A lot of the auto ancillary plays are doing well this morning. Look at Bharat Forge, 4.5 to 5% higher. There's Sona BLW that's also doing good. Not just Castrol, Gulf Oil Lubricants is also up 4.5%. So interesting auto plays. But to come back to the large cap screen, Nifty's up 140 points, and the biggest gainers include some of the global-facing names like a Hindalco, up about 3.5%. ONGC is high, about 3%. Then there is M&M, BEL, Infosys, Adani Ports. It's a pretty widespread move across stocks and sectors. L&T is recovering this morning. So that whole beat down the industrials trade seems to have paused. The exception would be something like a Power Grid because numbers are bad. I mean, and there the market's not going to be charitable. Power Grid is down about 3%. And consumers are cooling off this morning. Staples, what you've heard the last couple of days is that not too many people are gung-ho on staples with this income tax cut. So Britannia, Lever, even Asian Paints for that matter, ITC, these are all stocks that are correcting. Rest of the market doing fairly okay for now.
So 140 points on the Nifty is what we have, and 23,500 on the index holding at this point in time. On the downside, Tata Chemicals is coming off about 4%. Power Grid, I think Vivek was talking about this, it's down about 3%. These are the top volume-led losers, top 5 volume-led losers. Swiggy had a 5% up move yesterday. It's coming off about 1.5%. I think we did mention Paradeep, which is down 6.
Yes.
And 110, 111. Welspun Enterprises is down 5.5%, so 570. Asian Paints is down about 1%. And AB Capital is down about 1. Gland, Ajanta Pharma are some of the others which are down between 2, 3, 4%. So that's the overall picture as far as market open is concerned. The big volume-led gainers, Premier Energy, 5%. Divi's 5%. Motherson, 8%. So this is, this is what's stacking up right on the top of the gainer board. And Vedanta is up about 4% as well. So it got smashed down, beaten down quite badly. So back to about 440. And Castrol is the other one I think we highlighted, which is up about 9% or so.
All right, well, let's get back to the conversation we're having with Sanjay Mukim. Sanjay, we've got the market open rates and we've discussed a fair bit about the budget. What about the next skew for the Indian markets, the RBI? What are your expectations out there? The street seems to be almost factoring in that we're definitely going to get a rate cut. Are you in that camp? The RBI, to be fair, in the recent past, they've done some OMOs, try to put some liquidity into the system as well. Do you think the rate cut is coming?
Yes, we do. And given everything that you highlighted, what the RBI has done, allowing liquidity injections and, of course, permitting the rupee also to move, we think the rate cut, at least in the near term, is a decently high probability. And that should start to transmit to the economy as well. Liquidity constraints are gone, so rate cuts should help, to be honest.
Rate cuts should help, absolutely. So we spoke about consumption, right, Sanjay, and what you like and what you would avoid. But what about infrastructure? Is this, you said you've upgraded consumption, X4-wheelers, but will that be at the expense of what we broadly define and what falls under capex/industrial kind of names?
On the margin, it is, Prashant, because if you upgrade something, you've got to fund it from somewhere, to be honest. And we do expect, and even before the budget came out, we did expect capex momentum from a government perspective to start to taper off, right? Because it was evident that the momentum we'd seen post-COVID, where government had a whole ton of revenue buoyancy, and you'd seen deficits expand, those periods were over. So we were anyway expecting this to taper off. It's come a little bit harsher than we had imagined. So yes, the upgrade to consumer discretionary comes at the cost of our capex-oriented allocations.
And in this, like you did with consumption, right? There are so many areas, subsectors, etc. Is there any space that you're more comfortable with, just in terms of growth? Forget valuations for a bit, but where you think growth should not be a problem?
Well, at the moment, it's very unclear, Prashant, because growth seems to be a problem across many sectors. It's just the outlook seems to have improved a bit with what the government has done. And like I was arguing earlier, even organically, we expect the lower income households, which is commonly termed as the rural basket, to start to do well in a few quarters. Right. So the anticipation of growth is better, I would say, in a more discretionary sort of cohort, rather than the standard staples. And I think you're starting to see that in the market as well.
Sanjay, on a sort of slightly different note, this relentless FBI selling, I don't know what's the latest. First it was, okay, fine, it'll get better and it'll peak out when Trump takes office, and that didn't happen, and they were supposed to change when the year turns. That also hasn't happened. Daily basis, still 3,000, 4,000 crores every day. And now, I don't know, with the portfolio churn happening, like you yourself are saying, right, that you've gone a little, you've cut weights on industrials and you've gone over on, consumer. So now as portfolios are churned, will we see more of it? FBI selling?
I don't know if you'll see more selling, Surabhi. I think the interest in EM assets will remain muted as long as global uncertainty remains high. So the mix index remains high. And, US bond yields are very elevated. So you're seeing, let's say, in liquid funds, you make very handsome returns in dollar terms, right? So why would a global asset allocator look to add EM equity risk in anticipation of 8 or 9%, 10% local currency growth, right? Because that's the kind of medium-term expectation everybody has. So it's only when the opportunity cost reduces and when you see lower rates in the US or better certainty of growth in EM assets, will you see a reversal of these outflows? I don't know if they will stop selling, but inflow might take time.
So, okay, you're saying inflow might take time. Got that. Just a quick word, and this is sort of feedback from your global teams as well, Sanjay. So, what's the broad view which is forming with regards to the US now? The number of rate cuts, etc., is moderated to, I think markets are expecting 2 now through the course of the year. But at the same time, there are many other things happening, right? Big cuts in government spending being proposed. What that could mean? Will that initially have a bit of a deflationary impact if they were successful in doing it? Is the view pretty sanguine with regards to US itself?
There's 2 answers to that, Prashant. Current data looks very strong, right? So the activity in the US, whether it is consumption, whether it is the broad-based growth indicators are strong, and inflation remains contained at the moment. But everything that is proposed is potentially inflationary and negative for growth, right? So you're seeing this combination of policy uncertainty, which is therefore forcing the Fed to hold back from rate cuts. Because while the data is strong, whatever is proposed could lead to inflation, not deflation in the US. And it may be prudent, therefore, for the monetary authorities to wait until that plays out. And this uncertainty, I think, is therefore transmitting to the rest of the world. Because if the Fed is not cutting and rates in the US remain this high, what is the attraction of EM assets?
All right, talking about EM, Sanjay, what about the India versus China debate? We were the only game in town till I think around 6 to 8 months or so ago. Then suddenly they started pushing in some stimulus. People started talking about valuations that appear. There's a bit of a reallocation that's taking place. Your view on India versus China at current reckoning, Indian markets have underperformed in the recent past. China has done pretty okay, though the economy continues to struggle. Your take?
Well, I think we've gone from that India versus China to an India and China, at least from a market point of view. So if you look at how India behaved pre the US elections, the Indian index used to track S&P beautifully. In dollar terms, the gap between India and S&P used to be close to zero almost on a daily basis, right? But as this US exceptionalism has crept in and it is US first and everybody else will figure out for themselves effectively, we've started to behave more like an EM economy, at least the markets have, right? And therefore, it's not a X versus Y anymore. It's a US versus EM trade. And the Indian equity markets now behaving as they used to previously, behaving more like an EM asset.
Okay, all right. That's a fair point there.
But
Sorry,
before we thank Sanjay, I just want to go back to the point from where you started, which is where is this market going, Sanjay? Recap that for us.
I'll tell you, I'll give you a different one. It's going up, then it's going down, then it's going up, then it's going down.
It's going down again.
It's going up.
But Sanjay, complete that point. You said that you don't see, it's hard to say if there's a bottom in place already. Just expand on that. I mean, what are we in for the next 6 to 8 months, given the global volatility, given all the Trump talk? What's your base case?
Well, we don't expect the market to go up in a hurry, Surabhi, and we hope that it won't fall further, especially on the broader market of the mid caps, because that could lead to potential liquidity issues. There are downside risks in the event of macro uncertainty, right? So you can never rule out downside, but I think you'll have to be patient through at least the first half of the year, wait for some of this policy uncertainties to sort out and the growth momentum in India to improve, in which case you get back to looking for upside.
Okay, so it is a bit like what Prashant is saying, right? Some down, some up, I guess. Great speaking with you this morning, Sanjay. Thanks so much for joining in. Have a great day. We look forward to the next chat as well. Well, it's all about capex and whether the government is changing its focus or not changing its focus. You heard a lot of stock market experts and analysts tell you that maybe it's not taking its foot off the pedal entirely. It's just that, as investors, we have to look at a different set of stocks altogether to play the story. Let's talk about this and more with the management of KC International. We also have to discuss the third quarter numbers. Revenue growth for the company came in slightly tepid, but the order book growth has been very solid. Margins have also improved, and the stock is showing a little bit of green this morning. We have with us Mr. Vimal Kejriwal, Managing Director and CEO of the company, joining in. Mr. Kejriwal, first, let's start with the good. And congratulations on your order book growth, because you're firing away. I think 22,000 crores already. You guided for an intake of 25,000 crores. If we put together the L1 and the actual order book, you're at 41,000 crores. So those numbers are really lofty. Let me start right there. Whether the buoyancy is so much that you want to revise your guidance, order inflow guidance upwards. And that ties in with what we're hearing around the budget, right? This whole debate around capex, whether there will be a slowdown in the new fiscal.
Good morning, Surabhi, and thanks for having me. As far as the order book guidance is concerned, I don't think we'll be able to revise it now, because we're at 22, L1 is 4,000. So I don't see more orders converging. We may get a few more L1s, which will probably converge in the next quarter. So this quarter, I think we are happy with the numbers, what we are talking about. And I think obviously with whatever has been talked about in the budget for the capex at 11 lakh crores, and then a state piece, and then some other piece on top of it, the PSUs. Actual numbers being talked about are 19 lakhs, not 11 lakhs. But let's see what happens.
Okay.
Sorry, go on.
So you're not looking to revise the guidance upwards. I got that. But from our earlier conversation, I remember, you said that your transmission order book is growing very, very fast. I mean, that business is really doing very well. But you had mentioned that the slowdown in public capex meant that the civil contracts that are happening, the civil work, that's going a little slow. So how should we sort of, read the next couple of months? And again, your interpretation of whether the business that you're in, whether you will still be the beneficiary of more public capex.
So Surabhi, you are absolutely right. If you look at our order intake of 22,000 crore, 70% of that is in the transmission piece. And even in the L1 of 4,000, I think virtually everything is transmission.
Transmission.
So clearly what is going to happen is that our transmission revenues, which were almost at around 50, 51, in Q3, sorry, I think were around 59%. 9 months is around 57. So we clearly see that the transmission piece will keep on going up the way the tenders are coming and the way the announcements are happening. As far as civil is concerned, I think clearly we saw a slowdown. In fact, our order book has degrown slightly, I'll say, because we were about 10,000. I think we are now at 9,700 or so. So I think that's the way it's going to continue for some time.
Okay, all right. Hi, Mr. Kejriwal. And it seems, at least for the time being, the street has looked through the operational numbers and they're impressed with the order book. But let's talk about the operational numbers, because for the first 9 months, you've grown by around 9%. You were guiding to grow by close to around 15% for the year. So by the end of this year, what kind of a growth rate will you wind up at? Point number one. Point number two is margins have improved, but they're still short of that 7.5% that you were talking about earlier. So on an average, what will margins look like? Revenue growth for the year, margin outlook, and maybe you could give us the margin outlook for even for FY26. Please go ahead.
Yeah, so if you look at our revenue growth, we definitely wanted to have a higher growth than what we have now. Okay, and I think if you look at what we talked about, there are a couple of reasons why this is happening. One is the significant slowdown in the water projects, which was done deliberately because payments were not happening. Now, hopefully, we have seen a allocation of some 67,000 crores for Jan Jeeval Mission. And if it starts translating quickly into cash flows, then a part of the revenues which we have deferred in the last quarter should come in this quarter. Secondly, I think the labor shortage still continues. We still have a shortage of close to 4,000 people across our civil and T&D business. And thirdly, what we have been talking about, the supply chain, especially on the transformers and conductors, is easing out significantly, but it is still less. So I think those is what contributed to a lower growth than what we had projected. See, as far as the annual is concerned, 15%, I don't know whether honestly we'll be able to do 15, but I don't think we'll be very far off. It may be 14, it may be 15, it may be 13.75. I don't think we have still given up on that number. We have a large Q4 lined up, and there's a huge amount of.
So 12 to 14% is doable, Mr. Kejriwal. 12 to 14%. That means
100%. No doubt about it.
Okay, 12 to 14%, and margins.
Margins, I am not sure right now with with the quality of revenue it will happen, but I don't think we'll be very far off. Whether it will be 7.4 or 3 or 0. It will definitely be between 7 to 7.5. I don't see that it will go down below. We are already at 7% for this quarter. And with the revenue projections or growth of 12 to 14 for the year, we'll definitely have a very large Q4, which will pull up the entire margin scenario.
Okay, so between 7 and 7.5, I mean, your guidance has been at 7.5 for a while. Mr. Kejriwal, good morning, sir. Thank you for joining us. Prashant here. Just talk about railways as a segment, right? I mean, if you look at what the budget is promising in terms of allocation, it is absolutely flat. So is that part? And you've told us earlier that the focus was on Vande Bharat. Now they maybe hopefully things will come back and they'll focus on rail infra building and not just on train sets. But this number that we've seen what do you make of it, and any implications therein?
So Prashant, if you look at the number of 2,52,000 crores. I think the addressable market for that out of that is, I think, around roughly 1,11,000 crores, which is the new lines and doubling and the Kavach, etc. So I think we are generally happy with that number because our order intake for this year has hardly been 2,000 crores. So for me, it doesn't matter too much whether it is 1,10,000 or 1,30,000. We have honestly gone slow on the railway, conventional railway side, where you need to work on tracks. What we are focusing on is on the Kavach side, on the power supply, and also on the metro side, where we are doing a few projects on ballast less. So I don't think the railway is right now,
Yeah. Okay. So there's room for you to grow even within that 1 lakh, 11,000 crore number that you said, right? The addressable market.
Absolutely.
On Kavach, I think late last year you got, there were 7-8 tenders which were issued. Has anything, what's it looking like this year?
So last year, I think last quarter, we announced some orders of around 650 or some crores on Kavach. There are a few tenders which have already come out and which should be decided any day. And if you heard what the railway minister said, in 3 years, he wants everything to have all their locos and all the things to have Kavach. So we do expect that there will be more orders coming out. I think the orders for Kavach are couched under the CLW order, the allocation, etc. It's not coming out directly, but we do expect it will come out.
Mr. Kejriwal, I'm curious. You started by telling us that there's the top line impact has happened because you've consciously chosen to go slow on water project because of some payment issues. Can you expand on this? I don't know. I mean, are these government projects or what? Because otherwise, we keep getting very big headlines. Even in this budget, this Jal Jeevan mission, etc. There's a big increase in allocation. So, what is the issue in water, and what potential do you see here?
So, Surabhi, we are doing only Jal Jeevan mission projects. Okay. And they are government projects. So, if you look at the numbers, if I'm not wrong, last year also they had an allocation of around 67,000 crores. But I think what happened was, for whatever reason, spend was only 26,000 crores. So now they have restored it back to 67, which is the last year's budget. So if they actually spend that 67, then I think we all will get money. It's not me alone. All the competitors, everyone has the same scenario.
So, but this is interesting, sir, and this is I'm glad you're bringing this up. So you're saying there's a delay in receivables, government receivables, in these Jal Jeevan orders.
So Jal Jeevan, what is happening is always the Jal Jeevan is a mix of central government and state government funding. It's a question of who puts the bill first. Okay, the state sometimes waits for the center waits for the state. I don't know, but I think, let me put it this way. In January itself, we got almost 150 crores of payment on Jal Jeevan. Okay, so I think somewhere we are seeing some opening happening. And I'm hopeful that with the allocation in this budget and the FM actually talking about Jal Jeevan mission, saying that we want water in all the houses like power. If that actually happens, I think this business can really grow.
All right. Mr. Kejriwal, just one quick query. By the end of the year, you're saying 12 to 14%, 100% you're going to do that. I'm taking a median, around 13% growth. So for you to do 13% growth for the year, your quarter four will have to be blockbuster. Back of an envelope calculation suggests that quarter four of this year in comparison to quarter four of last year should deliver a growth of around 22%, which will be around 7,500 crores. Doable?
Absolutely. That's a number we have in mind.
Got it. All right. So quarter four will be blockbuster. We'll brace ourselves for the 22%. That was just the back of an envelope calculation that I did. Final question from my end. The cable subsidiary, any plans of listing it? That's the buzz.
I think it's too early for that. The idea of transferring to a subsidiary was that we thought we'll have much more focused growth as a product company rather than a part of a EPC. So, and we are spending around 200 crores right now on the capex. So I think whatever we want to do will probably be at least 1 year down the line or maybe 1.5 years down the line. Not today, no.
Okay, and just leave us with the mix, the revenue mix. Like you said, transmission is firing on all cylinders, and that's 57% of your business. What is water at right now with this Jal Jeevan? And how much, what is the contribution of railways? We're just trying to understand the mix and what you're projecting. Just very quickly.
So railway for this year would be around 10% of our revenue. Water, I don't have the exact figure, but it would be around 6-7%, around 1,000-1,200 crores or so would be our revenue from water.
Okay. Got that, and I think that's a pretty... By the way, I just wanted to ask one thing on Kavach, and I think you've given us this number, I forget. What's the total over 3 years, if everything has to be... Kavach has to be installed, as the minister has pointed out. What's the opportunity size, and how many players are there now eligible to participate in these tenders?
So as far as I know, there were 3 approved players. Then there are 2 or 3 more who are in the pipeline, who has, I think, got some in-principle approval. Some of them, I think, have got trial orders also. So the expectation is that in the next quarter, maybe by this quarter, they will also get, actually they'll get formal approval once they install in one of the projects, once they complete the project. So I think in the next 2 or 3 months, you'll have probably another 2 or 3 more players from the equipment side. EPC side, there are not many. So we are one of the very few players who actually work with them on the EPC front.
Okay, all right. So 5-6 players in total over the next couple of months, right? Including what you have now. Mr. Kejriwal, it's always a pleasure, sir. Thank you very much for patiently answering all our questions, and good luck to you and your team. Thank you. We take a quick commercial break here. We'll come back with the management of IndusInd Bank. That's a big bank earning that we want to focus on. Lots of interest here. Back in just a bit. Welcome back. IndusInd Bank posted lower profit from year-ago levels due to a fall in margins and partly because of higher provisioning it had to make for the higher slippages in the MFI segment, unsecured loan portfolios. Margins have also fallen about 15 basis points from second quarter to below 4%. Slippages, of course, are essentially what the market would like some guidance on. What's the situation like for the rest of the year? And of course, we'll talk about whether there are any implications from the budget which has come through. Well, we have the Managing Director and CEO of IndusInd Bank, Mr. Sumant Katpalia, joining us now to take some questions. Sir, good morning. Great to have you with us here. Thank you for your time. Prashant this side. You know, so the focus for IndusInd really is because everything kind of depends on what happens in the MFI portfolio for you. So that's what I want to start with, sir. Could you give us some sense of whether we've seen the worst of stress in MFI? You know, because this is a segment where stress is high, but profitability is also high, right? I mean, yields are typically, 10 percentage points higher as compared to other segments. So it's a trade-off. Could you give us some context, some sense about how this segment is likely to behave over the next many quarters?
So, Prashant, first of all, I must say that the bank has a very well-diversified book, and microfinance is only 8 to 10% of our book. So we were at 15%, but slowly and steadily, we've been diversifying our book. And one of the businesses which we've started is the merchant acquiring business in deep rural. So I continue to believe that while microfinance is a very important component of our book, but it's only 8 to 10% of our book. Having said that, I think what we've seen in the month of December and January, the forward flows have stabilized, and which means that our collection efficiency in the 0+ bucket has been 99.5%, which gives me the comfort that we've seen the worst of microfinance. But I think it's too early to comment on it. I would like to see another 1 or 2 quarters before we can say that there is stability in the microfinance business as of now. Of course, October and November were bad quarters, and you've seen.
Right. Sorry, you did say we've seen the worst of microfinance. So that is we can go with the headline, Mr. Katpalia, right? But have you seen the worst?
No, I don't think we can go. I said.
No, he didn't say that.
I've said that we need to see more stability, and
okay.
I think we will see 1 or 2 quarters more of the flows coming in. And what the forward flows are, and then we can say, yes, there is a stability which is coming. So in these businesses, you have to see 1 or 2 quarters.
Yeah.
Okay,
will you grow the MFI book, Mr.? Are you confident to grow that book, or will you be in a wait-and-watch mode for the next 2 quarters?
See, we've done about 9,000 crores of disbursements last quarter. I continue to believe that there are customers which are exclusive to you, or exclusive plus 1 for you, which is about 75% of our book. I continue to believe that you should do that. Then there are 83% centers which are greater than 2 years, which we believe that you should continue to service them. So I think there are specific pockets where we believe we have created loyalty or we have center loyalty, and we should continue to service these clients. It's not a bad business. It's just that there were certain areas where there was over-leveraging, and we stopped the growth in this business 4 quarters ago, having seen the over-leveraging happening.
Okay. Suman, good morning. I'm Lata, and time permitting, we'll come back to the MFI issue, which you have answered, of course, adequately. You know, I went through your investor presentation. I believe MFI bad loans are only 30% of the slippages. So there have been some trouble even with the unsecured loan portfolio. Can you tell us whether that is likely to improve? Have you seen the worst over there?
So you're absolutely right. So there are 2 areas where I think are areas. One is a corporate loan slippage out of the restructured asset, which did, and I think that's a 250 crore. And in the retail segment, other retail segment, we had flows coming from credit cards specifically, about 300 crores of flow, which came in. And I think those flows which came in, what we are seeing, the 0+ again, in the credit card has stabilized now at an elevated level. So it's not that they have gone down like in microfinance, but at elevated level, the stability is happening. I think the stability of credit card book will take about 2 to 3 quarters more before we can say that we are out of the wood on the credit card business. Personal loans continues to do well.
Okay, so overall, you will have a good idea when you look at the incremental flow in the SMA1 and SMA2 book. Just for the viewers, SMA is when people don't pay within 30 days, and SMA2 is when people don't pay within 60 days. How is that flow looking? We are almost 1.5 months into the new quarter. Is it falling?
So in the microfinance, you've seen it, I told you 99.5%. So 0 plus collection efficiency is 99.5, which was 98.3. So there is a flow.
Improved.
In credit card, I think the flows have really improved. PL and LAP are always doing well. So there is no issue.
So in terms of slippage ratio, can we expect that this is the high and the annualized slippage ratio will be less than 2.4? I mean, is there a reasonable hope?
I'll tell you, Lata, you must look at October and November were bad months. So the 30 plus flow is still 4% in the microfinance. They will flow. The resolution rates are poor in the 30 plus bucket. That's why you have to see the forward flows. And October, November, and those customers will flow in this quarter. And I think that's the end of what you should see in microfinance. I've always said that the microfinance businesses do correct themselves in 3 to 4 quarters. And I think this is the third or the fourth quarter which we are seeing of microfinance. And next year, hopefully microfinance should have a very good run.
Actually, we got that Sadhan and the MFI and gentlemen over previous shows, and they have pushed back the guardrails. So that was what worried me. If they are pushing back the guardrails, then people are still giving more than 3 loans per person. They were supposed to, tell their members, you should not give more than 3 loans. But now they have pushed it back from Jan 1st. So I'm worrying whether, you will have one more quarter of pain.
I think as long as your forward flows are stabilizing and the composition of a book which we've disclosed in the investor presentation looks the way it looks, I think you should be fine.
Okay. All right, Mr. Katpalia. So what you're saying is that maybe another 2 quarters to a certain, if MFI is completely bottomed out, another 2-3 quarters to, for the credit card business to also, all that stress to also even out. So now let's talk about both business growth and margins. I guess because the slight more cautious, go-slow approach on the unsecured side of the business, obviously, yields to an extent get impacted. And now we're expecting the rate cut cycle to begin as well. Your net interest margin slipped just below the 4% mark in the third quarter. What is the guidance, sir, given the market environment?
I think it's be very unfair to give a guidance as of now. I would like to restrain from giving it. I think what we have to watch out is how the growth comes back in the microfinance business. And I think this quarter will define whether disbursements come back and the collection efficiency is sustained. Second, I think the vehicle finance business should have their best quarter. We did 13,300 crores of disbursement last quarter. I think if we can do better than that and continue to grow the vehicle finance, which also the industry went through a very tough first 2 quarters, I think we should start seeing the retail growth coming back as a consequence. And our margins comes as a consequence of a portfolio mix. Today, the portfolio mix is tending more towards corporate. I think we should be 56-44. Today, we are 53-54, 53-54 consumer. Yeah. And I think the mix change will define our margins.
But sir, just to follow up on that point, right now you're saying it's more geared towards corporate and you'd like to see that, tilt go back towards some of the higher growing segments like retail. That's one part of it, the mix and whom you're lending to. The other part is the rate environment itself. As the rate cuts start coming in and the expectation is we'll get the first on Friday, how will that play out on the margin profile?
No, I think the pointed questions, Sumant, is how many of your loans are external benchmarked?
So that's exactly. So EBLR has been coming down. So if you look at the corporate yield or the floating rate book has already been coming down. Yeah, so it's already at the EBLR rates are already coming down on a regular basis. Unless and until you're repo linked, which is only 7%, EBR linked is about 33%. So I think those loans have already started coming down. So please
you have only
understand,
7%
repricing already started.
Okay, so only
So you're not
7% is repo linked. That's important. If there is a repo cut, only 7% is impacted.
Yeah.
That's right. Okay, now let me come to the
Yes.
budget. Okay, let me come to the budget. There is more money in the pockets of people earning 12 lakh and maybe even people up to 25 lakh. It makes a big difference if you have 10,000 rupees more in your hand. Do you see that as a reason why you will have more retail loans, more personal loans, and perhaps even safer ones?
So I think if you look at this budget, I think there has been a balanced approach towards three key aspects. One is consumption, the other is capex, and the third is the fiscal deficit. If you look at the tax threshold, which has been changed from 7 lakh to 12 lakh, and also the guardrails or the slabs which have been changed, I fully agree that it should boost consumption and the disposable income of the middle class will improve considerably. What is more important is, I think the launch of a comprehensive program like rural prosperity and resilience, aiming to address the women entrepreneurs. And I think this augurs well for the marginal farmers, women entrepreneurs, and specifically for microfinance segment. So I think we are going to see a consumption coming up. We're going to see rural India continuously doing well. I think it's a very pragmatic, forward-looking budget, and I think they've addressed a lot of gaps which existed in rural India as well as the middle class, and the sentiment, household sentiment, which was one of the objectives of the budget, has been met as a consequence of that.
So what would you say will be your loan growth because of these positives? Will it go up to mid-teens? And what will be the retail
quarter? Give me another quarter. So I think, give me another quarter. I've always said our guidance has been 56 to 58% retail. That is where IndusInd Bank will make 4 to 4.2% NIM. That is exactly the split which the bank wants.
Okay, 4 to 4.2% NIM in...
if you get to 56 to 58% retail. And when do you think you reach there? I mean, you take 2 quarters? Is that what you're saying?
I've just told you, give me another
Okay.
quarter before I give a guidance on that.
Okay, got that. Mr. Katpalia, just a quick word on... I mean, your term, sir, ends in March of this year, right? And could you tell us
Yes.
what's the RBI approval is awaited? Could you give us a sense of what that is looking like?
You can't give ever a sense of what it's looking like. You have to wait for the approval. So that's where we are. We are in the process of awaiting for the approval, and that's where it stands right now.
Okay. No capital raising plans?
We don't need it. We assess it every 6 months. We are very well capitalized. Our risk weights have gone down. So I think we are very well capitalized as of now.
If perchance there is LCR or ECL guidelines, have you all assessed the impact on the balance sheet or on the return ratios?
Yes.
If you can elaborate.
So I think we've seen that. So if we've done it basis the older guidelines, they are going to come up with the new guidelines. But if I take the older guidelines, it's about 2,800 crores. We already hold provisions of 1,400 crores on our books, and I think we are fine.
Okay. Thank you very much.
To it.
Yeah.
Over a period of
Go
time.
ahead.
All right.
Okay, Suman,
No,
thank
we
you
are fine
very
with
much
it.
indeed for your time and all the very best. As per your promise, we will call you after that 1 quarter when you think that you will be in a much better position to tell us about margins and about loan growth. All the very best.
Okay.
Over to you.
All right, so that's the word coming in from Innocent Bank, Mr. Katpalia there. Let's move on and talk about the chemical space, because a couple of chemical companies have actually reported a good quarter after a long time. The next management on our radar is Vinati Organics. The company saw a steady performance in the third quarter. Revenue registered a double-digit growth. There was sharp margin expansion as well. To talk about this and the trends ahead, we have Vinati Saraf Mutreja, MD at Vinati Organics. Great to have you, Vinati, with us. So, that's exactly what everybody is trying to figure out, that whether it gets better from here. But before I talk about the numbers, something else caught my eye. Apparently, you are setting up a subsidiary in the US. And perhaps you'll be looking at some manufacturing there as well. So, I don't know, is that a step forward to de-risk yourself just in case there's some tariff action here and there? Let's start there by understanding this expansion in the US that seems to be in the works.
Yeah, well, the subsidiary in the US is we export a lot of product to the US, and some of our customers expect us to have a warehouse, as well as sometimes we need to restructure the product, do some reprocessing. So it's purely for that. I'm not really sure if it's anything to do with the tariffs, given transfer pricing and all of that, but it's just purely to service our US customers better.
Fair enough. So it's not like you're thinking of manufacturing in the US. It's a warehousing facility to better serve your customers.
And maybe some reprocessing as well, yes.
Some reprocessing. Now, these days, whenever an Indian company is sort of thinking of better on-ground, onshore presence in the US, you've got to ask whether that's forward-thinking to mitigate any tariff issues, right? Never know what's coming next. But anyway, let's talk about the business now, because the business has been looking really good. We'll get the numbers up on the screen. 17% top-line growth for the quarter gone by, and 19% if you're looking at the 9 months, and there's margin expansion as well. So let's walk us through this. I mean, is it volumes, is it better pricing, or is it both?
No, it is purely volumes. Last year was a subdued year, and most of our products have seen growth this year, especially ATBS, butyl phenols, as well as antioxidants, and I expect this momentum to continue going forward.
Okay. On ATBS, you're also commissioning a new line, right? I mean, there's new capacity that's coming on stream by, I think, March or April. So what are the volume projections then as that starts going on stream?
Yeah, absolutely. That increases my volume capacity by about 50%, and that is expected to come on stream by Q1 of FY26. It's a 20,000 ton capacity. We do expect to reach full capacity utilization over 3 years.
Okay. What can you sort of tell us about pricing? Like you said, right now the improvement is entirely volume-led, but is there any scope, I mean, any sort of sign of some movement on pricing as well? What are customers saying?
No, see, we function, as you would see, at an EBITDA margin of 26%, 27%, and I think that's a healthy, sustainable margin for a manufacturing company. So to expect a price increase or a margin improvement, I think we are more focused on adding new products, expanding our capacity, and going for a volume growth by making our margins.
So your margin, speaking of margins, the margin bumped up to, at the EBITDA level, bumped up to 27% in this quarter. So is that a one-off, or is this a new level where you're hoping to run, at which you're hoping to run?
No, I think I think in the range of 7%, again, depends on, there was some raw material fluctuation. There could be some RMC price that comes down with the quarterly lag, which affects, the next quarter. So this range is quite sustainable for the next 3 years.
Okay. Got that. I think we're having some issue with the video, which is kind of conked off for now. This new ATBS plant that has been sort of commissioned, Vinati, morning, Prashant here. What will the contribution be from ATBS in 26?
Yeah, ATBS contributes about 40% of our revenue now. And next year, we expect to maintain that percentage, because a lot of the volume growth will also come from antioxidants and butyl phenols, as well as BOPL, our subsidiary, Vidal Organics.
Okay, fair enough. And you've already spoken about margins. On revenue CAGR, you've said 20% CAGR is what we should expect. No reason to change it?
No, absolutely no, because just given the momentum in our products and the new products coming on stream, I think we maintain a 20% revenue growth.
Vinity, just a quick, word on China. The industry had been complaining about, heightened competitive intensity. I don't know how that's playing out. Is there still a lot of import coming in from China? And are you expecting anything in terms of, policy measures like the steel guys are asking for safeguard duty?
Well, in PTBP, the butyl phenols as well as antioxidants, we do see a lot of cheap product coming into the country from China. And we have approached the government for some trade remedy, but let's see how it pans out. I think there's still time for them to make a decision.
All right, Vinity, we'll leave it there. Thank you very much for joining us. Good luck to you, your team, as you execute, and we look forward to our next chat. Thank you. Well, I think there's a new listing as well, which is at the bottom of the screen. Dr. Agarwal's is listing at 406. Issue price was 402, so it's a flattish kind of start for Dr. Agarwal's Health, which is the listing of the day. I mean, towards the end of in December, November, I mean, it was absolute crazy madness, right? I mean, a few listings. I remember one day when we had about 5 listings. It's kind of slowed down. The pace is slowed down as the market's cooled off a little bit. But the pipeline is strong on the primary market side as well. Let's talk about some more stocks on the move. Divi's, of course, has been surging. Vinny's been tracking this name. Let's revisit this. Vinny, over to you.
So in terms of, yes, DV's lab, what we're seeing is right now in terms of con call highlight that came in yesterday, they highlighted in terms of the Kakinada project, where they've done a lot of capex work coming in, which was an important update on that front. So they have fully commissioned one of the part and unit 3, that is a phase 1 for this project. The next 6 months, we'll see more units and more phases coming out from this project. So an important update there. Custom synthesis business of the company, that's seen as a good growth. They're expecting several opportunities here, as well as generic business. Pricing has maintained a bit of a stability. Do not forget that's been facing a lot of pricing pressure, so stability is something that's a positive front. Now Citi on the back of this is maintaining a buy rating. It's a target price of 6,850 rupees, top pick for the company. The company is also highlighting in terms of how upbeat they are in terms of GLP-1 opportunities, multiple products and custom synthesis, which has led to increase in terms of inquiries that the company has been getting, customers that are coming in for the company, and obviously they are expecting, conservatively targeting a double-digit growth. Jefferies on the back of this is also maintaining a hold rating, target price of 6,280 rupees per share, and they too are positive in terms of the growth opportunity that DV's has on the GLP-1 side. So that is why we're seeing DV's app has been buzzing in trade, good set of numbers plus good commentary coming in from the company.
Got it. Divi's up 5%. Actually, it's not just Divi's, the whole market is buzzing. We haven't checked the market in a while. What started as a 100-point up move has now become a 200-point up move. It's looking really good for the Nifty. And the mid-cap index is even better. 1.5% up on the mid-cap index, 1.5% up on the bank Nifty. So it's pretty solid. And the interesting aspect is that the consumer stocks in the Nifty, they are completely getting sold out today. Trent is down 5%. Look at this. Britannia, Lever, Nestle, ITC, all of these stocks are lower. And some of the others, including the CapEx names, they're doing better again. L&T, BEL, these are stocks on the upside. However, one CapEx-related name that hasn't hit the mark in the third quarter is Power Grid. Let's go across to Vivek. Vivek, you were earlier telling us that it's a miss on all counts, is it?
Absolutely right. Operationally, it's a miss on all accounts. But also one thing to keep in mind as far as Power Grid is concerned, especially regulated equities like NTPC and Power Grid, is that markets generally tend to look beyond the numbers themselves. But of course, our numbers key to track, and it's a miss across what the street was anticipating. Just to go through the numbers once again, revenue is lower by almost 2.5% on a year-on-year basis. EBITDA is down over 6.5% on a year-on-year basis. Again, a miss versus our poll. EBITDA margins too have contracted on a year-on-year basis. Almost a 350 basis points contraction is what Power Grid has seen, and profitability is down 4%. Now, segmental revenues, when you're looking at it, transmission revenues have actually dipped. So 6,545 crore versus a little over 7,050 crore last time around. Consultancy revenues quite strong off a much lower base, and telecom revenues are something that we need to keep track of going in the future. Is 126 crore versus 100 crore. A key to watch as far as the Q2 or the Q3 call is concerned. Number one, any tweaks to the capex and the capitalization guidance that the company has given. Remember, at the end of Q2, very robust commentary was given as far as the capex guidance was concerned. FY25 capex guidance, they increased to over 20,000 crore from 18,000 crore, and which was actually a revision upwards from the earlier envisaged 15,000 crores. So two upward guidances as far as capex is concerned. FY26 capex guidance was increased to be in the range of 25 to 30,000 crore from 25,000 crore earlier. Also keen to watch out for smart meter projects. Company has a robust order book, very strong success rate, whether that can continue. But it's a miss on numbers, which is why the street is selling off Power Grid today.
All right, Vivek, thanks very much for that. Mitesh is back with us with what's he making of the market. Mitesh, Nifty is about 60-80 points away from Saturday's high. Bank Nifty, I think at the day's high, almost got there and then has pulled back a little bit. How are you looking at it and what would you advise?
So early in the morning also I suggested, maintaining a long bias, and the Bank Nifty now is at close to 50,000, which was my second target. 49,750 being the first, that was clear. So 50,000, I think you might see some mild profit from supply emerging, but overall pattern is quite bullish. So I think once we get a move above 50,070 to be precise, I think this index could possibly see further upside to about 50,700, 800 zones. So I'm positive, but I think traders can now take some profits and maybe trail their stop losses, but maintain a long bias. I think I don't think this is a market which is suggesting me to go short. Just that you've had a rally for last 4 or 5 days. You are at a supply pivot. You might see some volatility in profit booking. That's about it.
And Nifty as well. I mean, similar kind of view.
Yeah, I think very similar, Prashant. The breakout for the Nifty or the next target for the Nifty is 23,600, 630 zones. I think once we clear that, I'm looking at 24,000 plus levels. So the only thing is that, again, if you're getting close to 23,600, take some profits, wait for intraday volatility, buy in that decline, or buy about 23,630.
Just a couple of names. It's all chopping around because prices have been up and down, and in most cases, and I'm talking about stocks which are up 4-5%, right? Look at Hitachi, BHEL, Inox Wind, Sona Comstar, REC. It's not clear. It's not really clear. It's basically just chopping around, and today it's a bit of an up day. Taj GVK, though, is a more forceful move from the lows recently. Any thoughts here? Taj GVK, Mitesh, 436?
So I think, Prashant, one, this is a stock which has been in a very strong outperformance mode, and even when the stock corrected from 445 odd levels to as low as 340, the medium-term trend was still pointing on the upside. The averages, the indicators on the weekly charts were still positive. I think we should see some supply on this 445, 450 marks, the previous high. But once it clears that, expect another 100 points on the upside. So my target for the near to midterm would be about 550 here.
Okay, it's not very far from the highs that it made. And the high on Taj GVK, I think, was made in January. It was about 460 or so from where it sold off. Mitesh, thank you very much. Good speaking with you, and we'll come back for more later. We take a break. We are back with Manisha, who'll be focusing on what's happening in commodities. Stay tuned. Coming up.
Welcome back. Well, the equity markets are doing very, very well. Let's figure out what's happening in the commodity universe now that the tariff threat has been, put to rest, at least for now. We have Manisha in the studios. Manisha, what do you have your eye on?
Well, I'm looking at gold prices, Surbi, because we've seen all-time highs coming into this one yet again. Yesterday, we saw an all-time high of $2,830 an ounce. We're trading at 28.20 at this point in time, but still very, very close to those all-time highs. Well, if you look at the prices itself, we've seen prices gain up by 28% in the previous year and 7.5% already in 2025. You mentioned about tariffs, and that really seems to be an issue right now. And even with that easing a bit, even as the U.S. has put a 30-day pause on tariffs against Mexico and Canada, we haven't seen the gold prices come off too sharply. That is because the U.S. trade policy is still uncertain. U.S. is yet to discuss trade policy with China. So there's a lot of uncertainty, unpredictability into the markets. This is what the gold prices really seem to be making use of. The other thing really is about the U.S. dollar index, where we saw almost 110 yesterday. That coming off also has been supportive. You also have markets expecting that U.S. will deliver 2 rate cuts in this year itself. Apart from that, we also have rate cuts already come in from Bank of Canada, from Switzerland, from European Central Bank, and that has been supportive for gold. The markets do anticipate that Bank of China and India, as they meet in this week, also could go ahead and cut rates, and that is where markets are taking support from. Inflation, slowing economic growth are some of the other factors which are in favor of gold right now. The other thing clearly has been about U.S. buying. U.S. has been buying a lot of metals, precious metals and base metals in last 1 month as this tariff conversation started to begin. So the numbers that we have latest from COMEX tells you that a lot of this metal has been converted from futures to physical. JP Morgan very interestingly says that $3,000 an ounce is a possibility in 2025. I mean, that is something that you have had Credit Suisse and Goldman Sachs continue to reiterate as well. So the U.S. has been importing a lot of gold ahead of these tariffs. And JP Morgan, which is the largest bullion dealer in the world, is anticipated to give a delivery of around $4 billion worth of gold as the February contract expires. So there's going to be a lot of movement, a lot of volatility that you can anticipate going forward in case of gold here.
All right. Manisha, thank you very much for that. So, yeah, I mean, gold is shining and shining brightly, has been for a while. Manisha, thank you very much for that. Well, we'll take a quick commercial break here. On the other side, it's our special segment, Citizens MPC. Lata will get chatting with experts and they'll discuss what the RBI will do on Friday, that is the 7th of February, at the MPC meeting. Lots of interest, and it's a big one this time around. Back in just a bit.
Hello and welcome to our monetary policy curtain raiser. It is baptism by fire for the new Reserve Bank governor as he goes ahead to present his maiden monetary policy. The budget was kind, yes, in terms of a lower deficit, but President Trump has created a perfect storm in the global currency markets, including for India. So exactly what should the Reserve Bank and the MPC do? Can you cut when there is a global storm in terms of EM currencies? That's the question for which we need answer. And as always, the Citizens Monetary Policy Committee of CNBC-TV18 meets on the eve of the RBI MPC to deliberate on what should be the issues and how to look at them. I have with me Chairman of our committee, Dr. Pranab Sen, and members Soumya Kanti Ghosh of State Bank of India, Sajid Chinoy of JP Morgan, Samiran Chakrabarti of Citi India, and Sonal Verma of Nomura. Gentlemen and Sonal, thank you very much indeed for your time. It's a very, very crucial policy, as I said. Sajid, it is the global churn that is going to worry us most. Just outline the, the announcements that have come from the US. What does it do to global inflation and our own inflation expectations? And what does it do to global growth?
Thank you, Lata. I think the global economy is getting more precarious by the day. 2024 was characterized by US exceptionalism, where US growth was very resilient, and that meant a stronger dollar and higher US rates. And both of those things put pressure on emerging market currencies, constraining their space and their ability to respond. What we're seeing now is the onset of the much feared trade war. The US has put on tariffs on Canada, Mexico, China. Those countries have begun to retaliate. So this trade war could get ugly very quickly. And the question really is, number one, this is going to depress global growth. I think the lesson from the first trade war in 2018 was very clear. It was the uncertainty of the trade war that depressed global business sentiment and global capex intentions. And it was very clear in the data in 2018 and 2019. So I think we should brace for a global environment with more growth headwinds, where exports will most likely, take a hit. The difficult question is whether the trade war is going to exacerbate or undermine US exceptionalism, because there is a scenario in which global growth gets hit, but US growth gets hit less because that country has offsets, easier fiscal policy and more deregulation. Now, that's the worst of all worlds for emerging markets, because you are living with lower global growth and therefore lower export growth. But your ability to respond to lower growth is compromised by the fact that US exceptionalism means the dollar remains elevated. Today's dollar rate is almost at 20-year highs, and US rates remain elevated. And then you're in this bind where you want to respond to a more hostile global environment in terms of weaker growth, but you're unable to do so completely.
I take your point,
that's the dilemma that these economies face.
Yeah, I take your point entirely, which brings you to the classical question, which the MPC will have to address, Samiran. Can you really respond with rate cuts and growth stimuli in a situation of, tension on the currency?
3 points here. The first point is that when there is so much of global growth uncertainty, we have to think of what we can do for our domestic growth. And from that perspective, whatever the budget is trying to do or whatever the MPC is trying to do will be very much focused on trying to get the domestic growth up. The second point is that to start with, our currency was somewhat overvalued by standard metrics of 40-country trade-weighted RER, etc. So part of the depreciation that we are seeing might actually be a good thing, and to some extent might be also giving that little bit stimulus that exchange rate depreciation gives to the overall growth outlook. So some part of the depreciation might not actually be a bad thing at all. And the third issue is that there is, at least our view is that our capital flows are more growth sensitive than interest rate sensitive. So it is somewhat unorthodox view, but if the governor, RBI, MPC, they believe that they can spur growth expectations at this juncture by a somewhat easier monetary policy in tandem with the fiscal consumption stimulus that we have seen, then it might just kickstart the capital flows into India, which are more growth sensitive, and to some extent that can stabilize the currency as well. So to me, the interest rate cut is not necessarily an antithesis to the currency story.
No, actually, you're right. Even in the last few days, we have seen inflation, we are seeing actually debt flows continuing somewhat. It's only equity that's hurt. If interest rate differential was such an issue, we should not be seeing debt flows. But, you know, your growth issue is more important. Is growth really under so much threat? Dr. Sen, that question to you actually. The budget is expected to have boosted consumption since it has cut taxes so generously. So what's your assessment of growth per se, domestically speaking? Do you think growth has a better chance now in FY26?
That's not clear, Lata, because they've given with one hand and taken away with another. And the way it's been done, I find a little disturbing, particularly for the consumption story. Yes. Because what they've done in effect is given a break to the middle class. But they have reduced the outlay on education, health, social services of various kinds, which essentially affect the lifestyle of the poorer, which is much the larger number. And we do not know whether these people will be then forced to, in a sense, rejig their consumption basket. And the net effect may well turn out to be negative.
Okay, well, yeah, that there is, of course, not much for the bottom of the pyramid if you look at it that way. But let me also get, some inflation questions out of the way. Sonal, how would you look at inflation now? Is there a possibility that with so much of, uncertainty and supply chain disruptions likely, inflation may surprise negative? Or is inflation definitely headed towards 4.2 or something, which the Reserve Bank is forecasting?
For now, Lata, it looks like we are headed in the 4.5% range. I mean, if you look at India's CPI basket, bulk of it is actually non-tradable. So food services play a much bigger role. The pass-through from currency weakness, our estimate is a 5% depreciation leads to about a 30 basis point impact on headline inflation. And we are in a soft demand environment. So really the spillover to consumers will be less. There's a bigger risk that firms see pressure on their corporate profit margins. Food in particular, we've seen a positive surprise. The two items that were holding inflation up, which is vegetables and pulses, are sequentially falling. And the big run-up in edible oil prices, the pace of increase there is also slowing down. So we are seeing some positive news on food inflation. Rabi prospects look a bit uncertain, but on the whole, I would say the decline in headline inflation and core, which is very well anchored, soft demand conditions mean that headline inflation, which was at 5.2% in December, should come down to below 4.5%, in fact, in January itself, and then stay in this 4.5% range through the next 12 months. So the inflation outlook does look a lot more favorable.
Okay, so that means the Reserve Bank has more elbow room. Well, let me get a little more on growth, and then I come to the all-important steps, the liquidity steps in particular. Shaumya, if you can wrap up the growth argument, how will a lower currency at 87.30 or 87.50 help growth? Again, there is the budget. Are we in a position to expect better growth in FY26 than in 25?
Yeah, thank you, Lata. I think regarding before I answer the question on growth, the point on exchange rate you mentioned, I think exchange rate movements in India, as we see that the exchange rate there has been again a significant depression in the value of the exchange rate because of the measures of President Trump. But my sense is that also a large part of the currency movement is also growth accretive in the Indian context. if you actually do an empirical analysis, you will find that apart from the dollar index movement, which determines the direction of the value of the rupee, a large part of the rupee is also determined by the factors which are positive to growth. So from that point of view, I think these current movements in exchange rate, we should understand the global idiosyncrasies. And the best thing to happen at this point of time is basically look into the growth prospects. As of now, if you ask me about the growth prospects for the next fiscal year, the numbers are actually not significantly different from what you will get in the current fiscal year, which is basically FY26. So my sense is that I think it will be better if you look into the perspective from a growth one rather than purely from an exchange rate perspective that what one may think of.
Okay. So short point, you're saying that next year's growth will be as good as this year's or as bad as. So something like 6.3, 6.4.
Yeah, it should be similar to this year's growth rate. So from that point of view, I think there could be, I mean, which it is required that there could be policy interventions which could actually spark growth.
Well, the more important liquidity questions are coming just after this break. Bazaar viewers, you will get to see it only at the end of the day. For now, it's time for Chartbusters for you.
There are straight rebounds on the back of bullish global cues after Donald Trump pauses tariffs on Mexico and Canada. The Nifty crosses, it's yet to cross the budget day high. The mid-caps are relatively outperforming.
Samvardhana Motherson and Sona BLW rebound in trade after tariffs on Canada and Mexico are delayed by a month. Mexico contributes close to 4% to Samvardhana's total revenues.
Castrol rallies more than 7% on the back of strong quarterly results. Earnings improved both year-on-year as well as on a sequential basis. The company also reports margins that were better than the guided range of 22 to 25%.
Defense stocks like HAL and BEL get a boost on the back of Defense Secretary Mr. Kumar Singh's comments. The Secretary tells CNBC-TV18 that the defense sector plans to cross contracts worth around 2 lakh crore before the end of the fiscal.
And the new kid on the block, Dr. Agarwal, makes a subdued debut on the street, lists at a discount to its issue price of 402 rupees a share.
Hello and welcome to Chartbusters. I'm Nigel, with me is Hormuz, and as we speak, the markets are holding well in the green in today's trading session. The Nifty hovering around the 23,500 odd mark. The positive global backdrop. Yesterday we were